morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the CEO of Tide, Oliver Prill. Great to have you with us again.
Good to be back.
Okay, so before we get cracking, we are going to learn a little bit more about Tide and what's changed since the last time we spoke. So, Oliver, unless I'm mistaken, when we last spoke, I think it was 2022, you were very much a UK and Europe-focused financial platform, not officially a bank, targeting SMEs. Later that year, you took the decision to expand into India, a country that is now a huge driver of growth for Tide. Tell me more about how the business has evolved over the past few years.
Yeah, so a lot of things have happened since that time, and it's good to be back, as I said. So we now have 1.6 million SME customers, we call them members, and India's been proving a huge success. So we actually now got more members in India than in the UK, so just over 800,000, growing very, very rapidly and really quite good unit economics. So that was quite exciting. So that's one thing that went on. And then we took the plunge of after that going to continental Europe. So we launched Germany last year, and we just actually entered France. So looking forward to continuing the international expansion.
Okay, and in September 2025, you raised $120 million, pushing your valuation to $1.5 billion, if the reports I've read are correct, which is more than double what it was back in 2022. What's all that money for?
Yeah, so it's both primary and secondary, and really it is, if you think about it, we've got a UK business that's actually profitable, right? It's cash generating. And so we are taking money from the UK and we're investing it internationally. And we felt we could be growing faster than we could generate cash in the UK. And so very simplistically, said is we will accelerate the growth trajectory, firstly by accelerating internationalization. That's not so much many more countries, but building out the countries which we're in, increasing the product rollout. We still believe we're only 50% done. And even though we're probably the leading business management platform, there's still huge opportunities. And then thirdly, we're actually quite bullish about what we call pragmatic AI. So this is less the hypey stuff, but actually deploying AI on our platform. And so we also want to accelerate that. So that was really the rationale behind the fundraising.
Okay, well, we're going to talk a lot more about AI a little bit later on in our conversation, but you mentioned that you're profitable. So does that suggest that maybe this is the last fundraising round until perhaps an IPO, given that you can probably finance your expansion plans from profits?
Yeah, so I think the question is, how quickly do we want to grow, right? So if we had slowed the trajectory, which is still quite an ambitious trajectory, we would not have needed to raise funds now, but we chose to. Maybe in the future we will further do that, right, to further accelerate. But for now, we don't think there will be significant fundraising. There may be fundraising also for exceptional events. So we did, for example, 2 acquisitions since we last spoke. So we're quite bullish about that. And clearly, often they come with a cash price tag that may require fundraising. But in general, you're right? It's not a business that needs a lot of capital until, the inevitable exit that will come at some stage.
And that is likely to be an initial public offering, and if so, when? The markets seem quite receptive right now to fintechs.
Yeah, so we just raised, and we raised it because we feel there are huge opportunities, right? So I don't think this is around the corner for us. We are financial investor owned, so we got 2 major shareholders now, PE shareholders, Apax and TPG, and we got a range of VC shareholders, so all financial shareholders that at some stage want an exit. And of course, that's also what the broader management team is in for. So it will come, but probably not for us around the corner, right? We would really want to go and deliver the next wave of growth.
And as of kind of now, while we're having our conversation, Revolut, the kind of, star pupil, if you like, of the UK kind of fintech sector, it's had its banking license approved, but it's still kind of waiting for it to kind of, be activated, if you like, or the final kind of, stamp of approval. You don't have a banking license yourself. Is that something you plan to do, or does Revolut's experience make you think, well, that seems like a bit too much, like too much hassle, more hassle than it's worth?
So for me, licenses are really a means to an end, right? So I think the days are over where investors were misguided, where banking license in and of itself has a value, right? It's sort of, do you have a business model and does the business model require a banking license? So for now, we've answered the question with no. We may change that at some stage in the future. We're not planning to, but it may. But it would come out of the logic of further sort of backward integrating into some of the deep manufacturing, which at the moment is not a priority, right? We're a business management platform, and actually our product roadmap very much sees product expansion on the platform. So new products, more connected products, deeper integrations, rather than, if you want, vertical backward integration.
Okay. And in the past, you've been an outspoken critic of aspects of Britain's business banking sector, I think arguing that open banking reforms were kind of, being stymied by some of the bigger banks. Is that still an issue, or does the UK government, for all its other well-reported challenges, does it get it now? Is it making life easier for neobanks like yourself?
So, first of all, to say, right, the UK is a great place for fintechs, right? We've seen it with the sector growing, and you mentioned Revolut, Monzo, Wise, Starling, Tide, and so on, and many others, right? So it's a very thriving sector. And so, I would not want to leave the impression that the UK is not a great place. And probably in Europe, and I count the UK to, as part of Europe, it is probably still the best place. However, there are some really big challenges, right? One of them is how to actually make listings more attractive on the London stock market. Frankly, everything is said that there is to be said. I have nothing new to add, but the government just needs to do these reforms. They've been talking about it for a while. We all wait for the Chancellor's budget in November. Maybe we'll see some of it. Open banking is another one, or the broader open finance things. A lot of things have been said around it. It just needs to get done. Again, there is dynamic. There are things happening, maybe not at the pace we would like to see it, but they're happening. We had real issues with multiple regulators, in particular some regulators like the FOS, the FOS, which was not meant to be a regulator, actually acting as a quasi-regulator. The government has actually acted on that, and so we're seeing a consolidation really into the FCA and the PRA, which is, much, much easier for players like ourselves. So there's a lot of movement of understanding where the pain points are. It's very clear what needs to get done. Some of it is underway. And we hope, like everyone else, that the government finds the strength to deliver the rest.
Okay, so we've heard about Tide. Let's now get to know Oliver a little bit better. So, Oliver, running a financial platform is obviously a full-time job. I mean, what can Oliver be found doing at the weekend or after work, or when he's not focused on Tide?
So, first of all, you have 4 children, so they do keep us very busy, and that's great, and a great both distraction from work, which I think we all need, because otherwise it's hard to switch off, but also, in the end, that's what we all live for. So it's, fantastic. So I spend a lot of time with them. Beyond that, and beyond work, I do take a really deep interest in history and politics, and so, I'm a little bit of a North Korea expert. I learn a lot about India, which is, as we talked about, actually now our largest market by number of members, a very, very rich history that I'm trying to understand. And so, I do a lot of that sort of thing. But in the end, one also has to say the role we all signed up to in these sorts of jobs, it is a pretty intensive one. And so it does take the majority of my time.
Okay, your interest in North Korea doesn't suggest, in the future, Tide, maybe you've had a chat with Kim Jong-un here and there, and maybe that's one of the next markets for you.
I've been to North Korea. I think, at some stage things, will move there. And, I do always jokingly say to our board, if ever, we enter North Korea, I will be the country manager. So, that sort of has various degrees of delight, but that's maybe for another day.
Okay. Well, look, you've been CEO of Tide, I think, for about 8 years. By my calculation, based on your LinkedIn profile, that's the longest you've stayed in any one kind of role in your working life. How much longer do you think you'll stay, and what's next?
So I'm hugely excited by Tide, right? So I think often in these sorts of journeys, you prepare for something, and this sort of feels like the thing that I really want to see through. Clearly, at some stage, every organization should be bigger than an individual, and I hope Tide is like that. So it doesn't completely rely on me, but I would love to take it to the next stage, and that's what I'm doing, right? So I'm fully committed to seeing it through. I've been there since 2018, so not quite the 8 years yet, but getting towards it. But I can see myself staying for the next part of the journey, and I would be hugely delighted to see Tide grow. I mean, when I started with Tide, I took over from the founder when we had 30 staff, 10,000 customers. Right, we now have 1.6 million members and about 2,500 staff. Right, so it's like every half a year, Tide is almost a different place, and it's just hugely exciting to be part of that journey.
Okay, now some listeners, viewers may have detected you have a bit of a German accent. You are German, but you are based in London. What, to a German, would be the most British thing about you?
That's a tough thing. So probably my sense of humor. So I think most British people would say, "Good God, Oliver has a German sense of humor," but probably most Germans would say the opposite. "God, Oliver, you've really become British." So I'm probably somewhere in the Venn diagram overlap that is probably a very small slot that a few people with sort of my background sort of occupy.
Okay, very good. Well, we won't ask you to tell any jokes for now, but maybe another time. But a key part of this interview, of course, is to get your take on the future of finance. But first, we are going to take a very quick break, after which we are going to continue our conversation with Tide CEO Oliver Prill. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, so now, Oliver, let's talk about the future of finance. So, Oliver, we live in, to say the least, interesting times in terms of geopolitics, green transition, international trade and diplomacy, and many, many other things that we haven't got time to discuss right now. And what's the biggest worry for fintechs, banks, and for the future of, I guess, the financial system and finance?
So I don't really think of worries, right? I think there are challenges, and challenges are really opportunities. And probably all, the top of that would be AI. And I mainly look at it as a huge opportunity, but there are many, many things that can go wrong, many things that will go wrong. But in the end, it will fundamentally change how fintech and, frankly, the whole financial sector and probably society at large will function. So that's probably the single biggest topic.
Okay, well, I was going to ask you about AI a little bit later on, but since you brought up the subject, I mean, on the business side, for a fintech, for financial services companies, banks or whatever, what has been the biggest impact so far of artificial intelligence, and what do you expect its impact to be, or the biggest impact to be in future?
So if you take a very broad view of AI, right? So both predictive AI, so the what used to be called machine learning, as well as generative AI, and then knitting it all together with agentic AI, we've been actually deploying close to 80 people on this. In the short term, we see the single biggest impact actually being, more in the operations area, right? So in Tide, a lot of the member support, a lot of our risk ratings, a lot of our analysis, for example, of blocked transactions, actually is done through agentic systems, right? These are live, they are there. And just to give you a sense, a transaction used to take us 20 minutes to review. It is now, with a human in the loop, down to 2 minutes, right? So these are huge productivity gains. Or another one we've been experimenting a lot with, as many others have, with coding. So again, there we see huge productivity gains, a lot of hype around just things, autonomous coding. We don't really believe that works in complex setups like ourselves, but they're fantastic at, doing bits of code, checking codes, documenting code. And so again, there we've seen between 20 and 30% productivity increases. So in the short run, however unexciting it sounds, we think productivity increases are the thing that can be delivered here and now, right? The other thing that is very much on the horizon is deploying agentic systems, to the front end. So basically onto the platform itself, to what members can do. Now, because we're regulated, it sounds, it's a little bit harder than, let's say, book a travel journey, right? So in there, we've been starting to carefully curate solutions. But in the end, our belief is that in the short run, say, think about writing an invoice, right? You can do that the classic way, using a template and so on, or you can just use an agentic solution to generate the invoice for you. We believe for a long time there will always be human in the loop. So on the back office, it will be our own staff. On the platform, it will be the member or their designated user to make sure that the thing is correct. But these are huge changes, the way the platform operates, the way member delight, and in the end, we're in the business of saving members time and money, how that can work for them. So we're hugely excited by it. That doesn't withstand the bubble that's probably going on in valuations on the thing, but underlyingly in the real world, we're seeing real impact today. And we're seeing, very, very fast improvements that I think will accelerate that journey over the next couple of quarters and years.
And you mentioned productivity improvements. I suppose traditionally, if a bank comes out and says, we're making productivity improvements, that inevitably includes job losses. And that is one of the big concerns that a lot of people have when it comes to AI, and that includes in financial services. But when it comes to artificial intelligence, a recent study you may have seen at the Budget Lab at Yale found that there was no evidence of a so-called job apocalypse yet, adding that generative AI's workplace impacts are comparable to earlier technological shifts. So should everyone just kind of keep calm and carry on, or is this really going to have an impact, and we're going to start seeing major job losses in companies that by virtue of what the business they're in have to digitize and do things in that way?
Yeah. So in general, you mentioned, right, every time there's been technological advances, even let's say analog ones like the Industrial Revolution, these productivity gains really just lead to an expanding economy, right? That's what really Karl Marx got wrong, not on the political side, but on the economic side. He thought all these productivity gains would lead to enormous mass unemployment because he didn't really understand that this would actually lead to an explosion of economic growth, right? And so since then, we've seen that every one of these changes in the end leads to a massive expansion of the economy, and in the end, that translates into increased prosperity. So I'm very bullish. That should not withstand the argument that, of course, the type of employment, right, and the type of skills that are required will change. And I think this will be the biggest impact. There will just be people that will not be able or willing to work in this new environment and that need to transition, right? I mean, think of it as the factory worker that used to sort of do manual labor, and now suddenly it's a machine that does that, and that worker now may need to be retraining as a restaurant worker, right, in the Industrial Revolution. The same sort of thing will happen. Marketeers will need to be, like, if you're a designer today, your core skill is no longer implementing design. You have Lovable and other things to do it. It's really thinking through the user experience. So, the jobs, it will fundamentally change in the nature, but I think it will just lead to economic expansion. And so we've never seen a historical scenario where there will be mass unemployment, and I doubt that will happen here.
Okay. So, Oliver, we talked about other innovations as well. I mean, the other big, I suppose, thing that we've been seeing this year is on the crypto front, especially when it comes to stable coins and the emergence of stable coins. What place do you see for them, in the future of finance?
So I think there are two things. I think AI is beyond question. It will transform. There's question how, but it will. I think the whole crypto world, I am a little bit more of, I wouldn't say skeptic, but I just don't see many of the use cases. I can see with stable coins some use cases as an alternative, but many of the others, right, beyond terrorism finance, money laundering, and so on, I see the practical use cases as limited. I think there is the thing of crypto assets like Bitcoin and so on, and you just have to have faith that there is some value to it. But I don't see the easy translation how crypto translates, a bit like AI, into necessarily real-world solutions. Having said that, I think things like smart contracts and so on, thinking of the Tide platform, I do see some use cases down the line, but unlike AI, I don't think small businesses will in the short term massively be adopting crypto, nor are there crypto solutions really required to deliver what Tide does. At least that may change once we see use cases coming through, but for now I'm more bearish on that one, while I'm very bullish on it.
Okay. And I mean, look, in this series, we often talk about fintechs, especially Europe or UK-based fintechs conquering America and the opportunities and challenges there. We've already talked about Tide, don't know necessarily conquering India, but certainly doing well and expanding in India. I would imagine that the challenges are somewhat different from expanding in India versus expanding in the United States. What advice would you give other fintechs looking to break into India?
So, in terms of India, the thing is to understand it's at A level, a very different market, but it's also a very fast adopting market, right? So what is there to understand? There's really some local, the tier 1, tier 2 cities, just the breadth of geography, the, diversity of the population, so on, that one needs to get a head around. There's a lot of the informal sector that are different. On the other hand, there's a lot of infrastructure that is actually much, much more advanced than what we have in many Western countries. Look, if you think of UPI, the India stack, Aadhaar, Udayam, which is the business ID. If you look at account aggregation, right? I mean, you can actually see someone's entire insurance policies, not only their bank accounts, right, through the equivalent of open banking, right? We're in the UK talking about open finance, desperately trying to see what loans people have. In India, that's available, right? So, a lot of the technology is actually much, much more advanced, and the government is much, much more proactive in putting this, what I call digital infrastructure, into place. So you need to get your head around it. And then the final thing to say is India, just the volumes are enormous, right? So the volumes you can do, but the value is much, much smaller. So you need to really, really understand your unit economics. Once you get your head around these sort of factors, it is actually a fantastic market, right? Because there's the depth of it is just unbelievable. When, in the UK, you have 5.5 million SMEs. You say, well, that's like India is 130 million, right? Just to give you a perspective.
Wow.
I mean, it's like one large city, right, in terms of SMEs, the equivalent of the entire UK, but of course of a very different scale. So you need to get your head around it, really, penetrate it. And that's how we would imagine the US. We haven't really looked at the US mainly because we saw a lot of UK players not doing particularly well. And so we've deprioritized it. Never say never, but for now, India is probably more of a play for us than the US would be.
Okay, great. And just briefly in this section, you did mention earlier that I think you said London is still the best place for fintechs. As I said, obviously we've discussed also that you are German. I mean, who would be your number 2 and number 3 top places in Europe for founding a fintech?
So Germany is making big strides. I think there's still big problems, right? Especially with sort of incentive structures and so on. I also see what, we've just entered France, so I see what the French government has been putting in place. And I think France is another, really good rising hub. What I hope overall that Europe really ends up with a community of 3, 4, 5 hubs that can actually scale, because the sad answer is, even though London may be leading in Europe, overall Europe has by far too few startups and certainly not scale-ups or unicorns. And so if Europe, and here I'm talking Europe broadly, not just the EU, wants to sort of have its place in the next couple of decades, we just need to grow more tech startups. And so whatever we can do, let's think of trade-offs between the markets. I would just say it would be great to have a few more hubs that can each hum away.
Okay. Lovely. Well, look, it's time now, Oliver, for our round of rapid fire questions. Are you ready?
Absolutely.
Ready as you'll ever be, I guess. Okay, so look, I've got 90 seconds on my phone's countdown clock. We'll get through as many of them as we can. One-word answers is all I'm looking for. And I will start the clock and we will get going. So, what fintech segment, in your opinion, has the biggest potential over the next 5 years?
SME banking.
What is the biggest pain point in your everyday financial life you'd like to see resolved?
Open banking.
Are bank bosses ready for the AI revolution?
Absolutely not.
Are customers ready for the AI revolution?
Potentially if it's embedded.
Have regulators in the EU and the US kept pace with all the new possibilities and behaviours we're seeing in the financial industry today?
Definitely not, but they've made progress.
Have you personally ever invested in crypto?
No.
Are physical points of sales part of the future of finance?
Absolutely.
Are bank branches part of the future of finance?
In a limited way, yes.
On a scale of 1 to 10, 10 the most likely, 1 the least likely, how probable is it that in the next 10 years, one of the neobanks will be as profitable as a top-tier legacy bank?
8.
That central bank digital currencies, CBDCs, will become a mainstream reality in Europe or the US?
5.
That you'll be able to open a crypto account at a top-tier bank?
8.
That SWIFT will still be the main tool used for transferring money around the world?
2.
That a new rival will emerge to challenge Visa, MasterCard, Amex and the like?
8.
That we'll see a top-tier bank or insurer bought by a fintech?
9.
Wow, we got through all of those, and we even had 5 seconds to spare, but I'm just going to let the alarm go. There we go. So that is, I'm afraid, the end of our round of rapid-fire questions, and I'm afraid all the time we have for our conversation. So I really just want to thank you once more, Tide CEO Oliver Prill, for joining me today. Thanks so much.
Thank you for having me.
And for everyone watching, we will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on X at Paris Fin Forum. That's all for now. See you next time. Bye-bye.